favorite thing that I listen to about every 6 months is, remember Lee Elia, his last game as the Cub manager, when he went in front of the cameras and they started asking questions about why they lost so many games. And he was like, and those bums sitting in the bleachers with no jobs, they can kiss my ass and you can print it. And then he was like, okay, you just quit your job as Cubs manager, didn't you? It's a brilliant thing. Anyway, we are live now and people are joining us live. And thank you. You guys will always remember where you were the first time you watched a live Futures Edge, much the same as when Kennedy was shot, much the same as what, by the way, let's start with that. Cause my first monumental memory was, I remember that my dad made me watch Richard Nixon resign. I was 9 years old and he was like, this doesn't happen very often. You got to watch when he does that. What is your, Bobby, cause you're not old enough for JFK. You're probably not even old enough for Walk on the Moon, which I don't really remember Walk on the Moon. What do you remember?
My first memory was driving around a steel blue Mustang and a steel red fire engine pedal car in Cicero. I mean, if you're talking about memory of an actual important thing, it would actually be Nixon.
Yeah.
Because my parents were watching it and they were like, sit down, watch this. And, but not because they wanted me to learn from it. They just didn't want me to leave the room while they actually watched what was happening.
Right. They want to keep an eye on you.
Yeah, exactly.
And you're a year younger than I am, correct? You are 59.
That is correct. I will be 59. I'm not.
And I will be 60 in 3 months. Right. Yeah.
So
and Michael, do you have a memory of an event happening that was etched in your mind?
No, I blanked it all out.
Good, Mike. You're so much fun to have on the show. Thanks. The way you tell a tale.
Can you edit that out?
I know we're live today. The way you tell a tale, it's like we were there. Thank you. Anyway, I
really don't. I was sitting here listening to Bob mention, and Cicero threw me for a loop, but beyond that, I was sitting here trying to rack my brain, and I really don't have something like that. Not a major USA or world event thing. Right. I don't really have it.
What about the Berlin Wall? Where were you watching when the Berlin Wall was being torn down?
I was in college.
And you guys didn't make a big deal out of it in college?
No, because
you make a big deal out of it.
I rarely went to college.
Okay,
I was in college. I wasn't at college.
Understood. But before we bore the absolute shit out of everybody watching, let's get to what they may have tuned in for. First of all, this is the Futures Edge. This is the first live show of the Futures Edge. We're doing it because it's technical analysis and it is very timely stuff. We want to thank you guys for all the support you've given us. We've been doing this for 2 years now. The amount of support we've given is humbling. It is about 10 times more than we ever expected. You guys are the best. Thank you for the DMs, all the retweets. We want to thank our sponsors. First of all, Hardcore Italians, go to the website. It's fabulous. Also, use our promo code for 15% off. Our promo code is, what is it, Bobby?
FU.
FU, which stands for Finance Unfiltered. So I don't know where your mind was, but get it out of that spot. FU for Finance Unfiltered. Also, Independence Arc Farm. Follow them on Twitter. Go to their website. Their meat, for the quality of their meat, the price you will be amazed by. Right before I came on, I put about 2 pounds of beef liver, soaking it in milk. And when I get done, I'm going to take it out, pat it dry, put some salt and pepper on it, and grill those babies up for dinner. But Michael, where do you stand on beef liver first?
Where do I stand on? I'm actually just not a huge fan of liver. I've tried it multiple times. I'm just not a huge fan.
Okay, let's go to stock market then.
I mean, if you want me to make something up.
Be interesting. No, you are interesting. You're one of the most interesting guys I know. Let's talk stocks. This is, by the way, for the people who are watching here, CNBC, which survives on clickbait and survives on plucking the emotion strings of their viewers. They're probably going to do a markets in turmoil bullshit piece tonight. We're going to try to look at it just very logically, very critical thinking, very technical analysis to see what's going on. By the way, so probably half of you are into technical analysis. The other half thinks it's just squiggly lines on a chart. It is not. It is a measure of sentiment and momentum. It is not voodoo. Michael, let's go to the charts.
Let's go to the charts. Okay. Well, finally, I feel like for the last couple shows, we've been caught in a range that we're finally breaking out of. I mean, we've been in this range since October. So how many shows has that been?
A lot of shows. Yeah,
a lot of shows. And we've had this major, still valid, massive, confirmed at this point, confirmed double top of the S&P, not triggered because we need a weekly close below 58.09. We do not, again, it's Tuesday. That's the level since this is live, people can now possibly, by Friday, you'll have the numbers coming out. 58.09 is the key thing to watch for.
Okay, by the way, so if you get a weekly settlement under that level, do you then need confirmation on Monday for it to trade below it?
No, but what I am watching though for is because we're getting the cycle bottoms, and we are probably, if we hit that weekly close, we will be in oversold conditions. I would be using a rally to watch for short setups. I would be using for a reactionary rally to watch for short setups and then establish a position. I just wouldn't be going Friday, all right, cash is closed. Let me just short the crap out of the futures because we triggered a massive double, especially in this market. You're going to get your rip your face off rallies. We started to get an interesting rally a little earlier today off a little mini double bottom. It petered out a little. I mean, so I'm going to still be watching for a more significant rally. Today here, I could give another piece of actionable items. If we trade above today's high in the next couple of days and follow through with a close above it, it's going to be a bounce signal for me. And then I'm watching for short-term a reactionary bounce.
Up to,
well, the minor level will be right about 59.20. The major area that I'll watch for a potential reversal is between 59.55 and 6,008. And I know that's a wide area, but that's based off the sell-off, that's going to be your major reaction zone. And if we did follow through at a bounce above 6,008 on a closing basis, that would mean I'd watch for a retest of the most recent triple top highs. But it's got to get above that 6,008 on a closing basis. Otherwise, I'm still watching for rollover plays. On a weekly basis, unless we triggered this massive double, I am right now, as of this moment, I'm in neutral mode. If we get the 8 crossing below the 21, I'll be in bearish mode, but that doesn't mean I necessarily go short. It means I watch for stronger short setups on bounce plays to establish short positions. And on the daily, it's been short since 24th of February. So any rallies that have come back into the rotation zone, which we saw last Thursday, we saw on Monday, we spiked into the rotation zone both those days, and we had sell setups there, and now we followed through to the downside. So that's essentially where I am on the S&P. Now, overall, if we do trigger the confirmed double top, the targets lower are 56.20 area, 55.25 area, and 54.30 area, roughly in there. So those are the major downside targets for the time being that will not shift because it's now been confirmed.
This, to me, I wanted to confirm something. First of all, the close below on the weekly double top there, that is the confirmation, right? I mean, essentially,
the trigger is the trigger.
I mean, well, to Jimmy's point, like, you need confirmation that it trades lower, that it's going to continue. To me, the close, especially on a weekly chart, is your confirmation, because it's a lot of price action. There's a lot of price action where the market is deciding at the end of a week's worth of buyers and sellers, this is the correct price, and it's below a key level. The shorter time frame you get to, the less reliable that becomes, where you might be looking for, I still like to look for retests of the level rather than continued trade below. But having said that, Mike, if we get this trigger, this weekly double top trigger, then that takes us below the 50-week moving, which I assume is what the green is. But it also takes us substantially below the 200-day moving average, does it not?
Yeah, we're trading right. Now, these are the futures on a back adjusted contract. We today finally broke below it. If we look at some other things, like if I jump real quick to the spiders, which is essentially mimics the cash, we traded right down virtually to that same area. So we're below it on the futures. We're right at it. We've bounced off of it on the cash, but it's it's not a specific. You don't fixate on the line and say, "Oh my gosh, we've hit it." It's an area again. So if we start triggering again, this is the same weekly double top is on. I have the spiders up here right now, which again has been confirmed, but not triggered yet. But if we do trigger that, that could potentially take it well below the 200 on the spider / the cash.
But can I ask you a question? I just want to clarify something at the same time. Your weekly level is a drop dead level, but your targets are areas. That's correct?
The target, I mean, we like on the spiders, we have 558.49 for a stop reduction. That's somewhat of an area. I mean, I'd probably just make it 559 at that point. Okay,
but I mean the trigger for the weekly double.
The trigger is in the sand. For example, the spiders, if it does not close below 575.35, it is not triggered.
Gotcha. What about the futures again? You said 58.08?
The futures are this low. You could just look at the low from Monday, January 13th. That week, the low is 58.09.
Okay. Oh, it's 09. Okay.
Yeah. So, Bobby, can I ask you a question?
Yeah.
So if you see that, because you made a great point about it's weekly. So weekly is somewhat of a drop dead level in comparison to the 60-minute bar. Yeah. If you see a settlement below that, do you think it warrants for you? We don't make recommendations, by the way, for you, a smaller short-term short to build on any weakness?
I mean, if I could see it close below it, as long as my risk to reward is still good, and I know based off this pattern where the stop would be and where the first target would be, it's a full position. I mean, there's no reason for it not to be a full position for me.
Because I may do it in a fly and target one of those levels I haven't figured out yet. I'll put fly.
Yeah, there's no reason for it not to be a full position. I don't scale into these positions unless the risk reward has gotten skewed, in which case I wouldn't mind getting some on a rotation back up, which will likely happen on a weekly. I mean, it's not in the analysis that it's going to happen. It's just a likely thing because it's a weekly chart, and intraday we can do a lot of this on the way down. But another time we could probably look at another weekly double and kind of look at the price action and see how it went. But being our first live show, I suspect that would just blow us all up. So
yeah.
By the way, just so everybody knows, if we do, whether this is triggered or not, the point that invalidates it, because until we move down the stop, the invalidation point is a close above 6,032.50. Does that mean your stop has to go above there? No, but that's the invalidation point that would invalidate the pattern, and then the targets would no longer be valid to the downside.
All right. What else because I would love to go. I think Nvidia is important to cover. I think the FANG names are important to cover. You can go to the Nasdaq and that's all good. I actually think it's more valuable to figure out what's going to happen in the 7 stocks. So what do you guys want to do? It's up to you, Bob.
Yeah, let's do MAGs.
Yeah.
And so we can look at the MAG 7 with that MAGs ETF.
Interesting enough, this is because we had this on in the past show, and it triggered a double top back at the end of December. It never invalidated the pattern.
This is a great example. Go ahead, Mike.
Perfect example.
Never invalidated the pattern, and we actually completed it. Yesterday. We completed it Thursday right before the end of February. So we completed on the 27th.
So what does that mean?
That means the double top. See, this is the hard.
No, I see all that, but what does it mean for going forwtake
What does it mean going forward? I'm watching for any bounce setups in the MAGs and then rollover plays.
Yeah.
Let's take a second and look at this price action, because this is what we were just talking about in the S&P, right? Is that there's a trigger and people are like, well, actually you asked the question, but I've been asked that question before. It's like, do you just put on a position or you scale into it? No, I put on a position, right? I didn't put this one on for the record. But if you look at it, look how long it takes to get to the target and how much up and down there is. Now, that's not always the case. Sometimes it goes directly to the target. Sometimes it does it in the same day. But for me, like, I don't have any sort of measurement or indication whether it's going to be a long and drawn out trade or whether it's going to be one that happens in a day or two. So I just put it on and I have my stop and I don't worry about it, right? This is a great example for sort of the fluctuations where even if you get a trigger and you kind of miss it, as long as you haven't violated the pattern, you theoretically can still put it on. But you're playing with fire if you wait to put it on, right? Because there are ones that go directly to target, and then that's that.
Can I add something about options real quick in here that people may find valuable? Because if I look at this, if I'm going to put on a bearish trade, because on a bullish trade, I might look for the right kind of call fly to put on. And I love that, because one of the reasons is as we start to move higher, vol tends to go lower. So it actually will fill out a little faster, because that far end call that you bought will lose. I mean, the two calls that you sold will lose value quicker as you go into the money. With the puts, with the put fly, it's not as easy because vol generally goes through the roof. So your put fly doesn't increase in value as much as you'd like it to. Does that make sense? Did I explain that well enough, Bobby? You understand that, right?
Yeah, I get it.
Okay, good. Yeah. Anyway.
So interesting enough, this reconnected with its 200 also. And if you're into the mags, I'd be watching if we in the next couple of days, if we bounce above today's high for that's the rebound rally into the rotation zone that I'd be watching for. Would that be just a long-term back up the truck buy? No, the sentiment's definitely shifted in. The mags are getting sold a lot more, and we're getting not a concentrated rally in them right now. Other things like Tesla's retested its 200. Nvidia has broken below its 200-day. It broke below its 200-day earlier, bounced above it, and now it's substantially back below. So you have a number of stocks. Amazon was another one. Today, hitting the 200 and bouncing. But we also, in Amazon, I'm just running through a couple of these real quick, we triggered a big wedge pattern. My first target area was the 200, and then we could still go a bit lower after another bounce play into the rotation zone. But you have a number of these of the specific Mag 7 stocks that have been breaking down, and they're now trading at pretty critical levels that if we bounce and then roll over and take out these lows that touched the 200, we could see a substantial pullback in more of the Mag 7 stocks, which could still, because they're cap weighting, trigger an even bigger pullback in the S&P and Nasdaq.
So what you guys have watched our technical shows before. I like to ask Mike the question of -3 to +3, bearish, bullish. Where are you at right now?
Daily basis, I'm at a -1. Weekly, I'm still at a 0 unless these patterns trigger this week. Then I'll start at a -1 on the weekly. And then as we start moving down, my bearishness will get more until we've completed the double.
Okay.
So real quick from our friend Widge, Jim, the answer to your question is yes, I can see questions in here. We weren't sure if we were going to be able to do that as
nice job. Good to have you, Widge. Thanks for support.
Inaugural. And by the way, you guys that are watching, if you don't follow Widge on X, you're missing out. He's at, what is he? At 3rd Gen Widget. That's what it is. At 3rd Gen Widget is his handle. And you got to spell out the word third. So Widge says, you guys are looking at the S&P as we head into the quarter end. Are there any thoughts about the potential effects of index rebalancing from mega caps that took it in the nards in Q1?
Widge, you're the hero.
He really is our favorite.
Yes. What do you think, Bob?
To be honest, I've never really paid too much attention to rebalancing because
neither have I.
I've never found a way to sort of take advantage of it one way or the other. Mike might have some insight on this. I've never paid much attention to it.
Say, Mike?
I'll pay more attention if, again, we don't get a substantial snapback rally in the Mag 7 stocks. because yeah, it's going to rebalance and broaden out the index, so they're going to have a little less effect moving forward. But I really need to see where we're trading in another 3 weeks before I can really focus on how much the rebalancing will affect the S&P index.
Cool. By the way, those of you guys that are watching live, do us a favor if you're on YouTube, hit subscribe and hit that notification button. It helps us out a lot if you do that. As you guys know, leave a comment if you could, like Widge did. We'd love a question. Speaking of which, I have a question if I can ask it. Gold, Mike, clearly seems to me to be doing a flight to safety move. I have several reasons I can explain why I'm positive it's a flight to safety move as opposed to anything else. I also happen to think that Scott Bessent, is it Bessent or Besant? What are we going with?
I thought it was Bessent.
All right, let's go with Bessent until somebody corrects us. Smart like Widge. I'll listen to Widge, but I won't listen to most.
We're going to someday meet Widge, and he's going to be like an 18-year-old kid who's just really, really bright.
There's no way an 18-year-old kid is as bright as Widge.
I'm just kidding, Widge. I know you're not. I actually know some of your history. Yeah.
Has been very clear, and I think a lot of us have missed it. And one of the people that didn't miss it was Jared Dillian, who said on his Daily Dirt nap, no, it was the macro dirt with Tony Greer and Jared Dillian rather. He said that he believes the target of the Trump administration this term is not the stock market. As a matter of fact, he's ignoring it. He's ignoring it. He said that Trump mentioned the stock market weekly in his first term. He hasn't mentioned it once. And they're targeting a drop in treasuries, which they're succeeding, right? So I look at gold and I say, okay, well, that is good for gold, because if you look at the latest data, I don't care what anybody says. I know a lot of people are talking about now the market is starting to price in more cuts for the Fed. Be careful, Jerome Powell, because inflation is ramping. It's starting to ramp up. And there's
GDP
a lot of
is also cratering, Bobby.
What's that?
GDP also seems to be cratering. Yeah.
So there's you see it on what? Atlanta Fed GDP now? Is that what you were looking at?
Yeah.
So based on that, I like gold again almost as much as I like gold in 2022.
Yep.
And I was starting to tire of the position. So Mike, what do you think of the gold chart, and what do you guys think of gold just sort of generally?
Well, we don't have a long-term topping pattern in yet. Last week finally reconnected us with the rotation zone. And again, it got very overextended. I mean, how many week run-ups do we have? 1, 2, 3, 4, 5, 6, 7, 8 weeks up, weeks in a row. We get a one red week, and now we're bouncing back up. And I'm watching short term to see if we close above 29.25 roughly. Above 29.20, go 29.26. We close above that. That resets it to where we should at least retest the highs and possibly break out. And on a breakout move, because again, there's no long-term top in play, and we're still holding the weekly rotation zone. We look at the harmonics. The next major harmonic cluster is just above 3K.
I think we get there.
So do I.
You know, this could easily break out again and retest 3K at a minimum. And then the next major, if it keeps marching along, the next major level is up closer to 3,100, 33,086.
Michael, did it matter to you at all that the down move of 2 days ago coincided with that top from early November back then?
Does it?
Did that matter to you? Yeah.
No, I mean, this is long-term support. It came down to
That's what I mean. It came down and kissed it.
Yeah.
Okay.
It came down to long-term support right here, and it came into the rotation zone, which is rising to come up. So this is a strong resumptive trend signal for me. Is it a guarantee? Again, nothing's guaranteed. The only thing that would put a damper on gold for me in the short term is if we start closing below 27.85 on a weekly basis.
So this sounds like a 1.5 positive to you?
I'm more at a 2.
2
based off the last couple of days price action. Now maybe 1.5 would be more correct until we do close, which might happen today above 29.26. If that happens, then I'll go to a 2.
Yeah. By the way, leave a comment if you guys who's long gold in this. I'd appreciate some input on that if you guys can leave a comment.
By the way, guys, I don't know how many of you noticed, but the shifting of the yield curve today was somewhat dramatic. 2s, 10s went from 20 yesterday to 26. Mike, I know you chart that. So you look at the 2s, 10s yield curve spread. You're seeing steepening happen again. We had we went from 25 to 20 to 26 in a 3-day span. So
yeah,
that
this was
flattening.
bounce. This is
What's that?
I have the chart up for the 10 twos based off the St. Louis Fed. So this isn't updated yet because they updated
Yep.
it in, but you can see how it was at 20. It's going to jump to 26, which has actually been the major key resistance.
Should we look at
in
a
the short
10-year
term.
chart?
Yeah.
10-year notes?
Yield
10-year
basis?
Do you want the yield?
Yeah, can we do
Do
the
you want the
yield?
yield?
Yeah, yield's
Yeah.
easier for most
There's
people to
the
identify
yield.
with, I think.
There's the yield. I was looking today. We did hold on again. We broke below it, but we had a substantial. This might have completed the short-term pullback in the yields. We broke below it, and the close is going to be well above where it is. And by the way, if we take out today's high tomorrow and close above it, we could have a snapback rally possibly to 4.4 in the short term. So we've had a lot of bearish pressure. There's been a lot of downward pressure on the yields, but this could be a nice little reversal signal in the short term.
Bobby, what do you think? Why do you think we had such a move down in yields? And when I ask that question, because I hope you then throw it back to me, because I actually do have an answer.
I think the move down in yields that we saw was based on this sort of surface thinking that tariffs across the board would just crush demand.
Okay.
We were going to get an economic slowdown based on tariffs. We also, and that's what I don't understand. Like, we have people saying things like, well, tariffs cause inflation, but they also crush demand. Okay, in this particular case, you got to pick.
Got to answer somebody. Right.
Right.
Yeah.
And, I look at also, he's a friend of ours, the guy from Gas Buddy. His name's escaping me right now. He's been on our show.
Yeah.
And I apologize for name escaping me. It bothers me that it does, because I
saw him on network TV last week, and I said to my wife, "Oh, that's our buddy." Anyway.
Yeah, I saw him on X a couple of times talking where everybody was highlighting his story about how the tariffs are going to cause a spike in domestic gas prices. Well, crude oil isn't responding to that at all, and neither is RBOB, which, for those of you that don't know, RBOB is the CME Group's gasoline futures. RBOB is down 7 of the last 8 sessions, right? And RBOB is also from its recent high, which would have been on February 12th. It's down 8.4%. Crude oil is down 6 of the last 8 sessions. So looking at this 10-year, I think, is important, because I think this is what the Trump administration is targeting. They're not talking about stocks right now at all. And I think the economy is honestly strong enough to handle quite a bit of this. But I don't think that people who are invested in the equity markets necessarily think that deep when the thing first happens. What do you think?
Well, okay. So I think that the yields are going down, and I'm kind of stealing it from Jim Bianco, which, if you're going to steal someone steal from Jim Bianco. He thinks that the talk of no longer funding militarily parts of Europe, no longer funding militarily Ukraine, means mathematically that there will be less bonds to sell. And all this notion of, we have $104 trillion of debt service in 2025, which is true at the moment, but we are also pricing in just gobs and gobs of long end bonds coming to market. I think that the market is saying there might not be quite the same supply as we thought. And that's why they're, buying it up. There's a demand supply imbalance. Does that make sense to you?
Yeah. Yeah, it does. I mean, again, the one thing I hear out there for all the negative Trump talk, and I have some negative Trump talk myself.
Same.
I don't like him saying protests are illegal, or at least not clarifying what protests he's talking about that are illegal.
I didn't like it at all. Yeah.
I didn't like that at all. And I don't like the idea of, honestly, I don't like the idea of giving subsidies to like chip manufacturers, et cetera, to build here. They have plenty of money. Let them do it themselves.
Mm-hmm.
But I do think that Doge, in a way, is austerity.
Yeah.
Right. And I think we need austerity. And who's going to do it? A guy who can't run again, and a guy who is in his final term, and a guy who's in the beginning of his final term, because he needs time before the midterms for things to get better. I just have to throw this out real quick. Ron DeSantis, 3.3 million visitors from Canada. That's not much of a boycott in my book. Maybe they wanted to get a glimpse of what the Stanley Cup winning hockey team looks like. He's a troll too, man. He's funny sometimes. All right,
Man,
so
troll has just become the thing. It's
Yeah,
like
it doesn't
sarcasm. Social media sarcasm has become a skill that really propels people, which, by the way,
You're
thank
good at
God.
it. You're
Thank
good
God.
at
Yes.
it. You're good at it. Mike, what do you see on the Treasury chart?
What's that?
This is the yield chart, right?
Yeah.
Yeah, this is a yield chart. Again, watching for that, at least that short-term bounce and seeing how that materializes. What's interesting, though, I don't know where this week is going to close out. We're in oversold conditions. We have cycles that have been overextended to the bottom. So again, reinforcing some bounce play. Now, if we close below 4.15 on a weekly basis, then I'm really starting to focus on the bigger pullback. Until that happens, if we don't have a huge rally this week in yields and then next week take out this week's high, it could be another pretty interesting bounce setup like that happened at the beginning of December.
Okay.
Not to saying it has to go to new yield highs, but we could extend the bounce to the upside, at least in the short term.
Bobby, does a move to
rollover play?
Does a move to 4.4 in the yields mean necessarily that gold will be under pressure? Or does it need to be higher than that?
No, I don't believe gold's going to be under pressure.
Neither do I.
And I think it's represented again in the yield curve move we saw today, because we saw long end yields actually finish well into positive territory with the front end basically unchanged or maybe up 1 or 2. And I think right now, again, what people are missing is that we have the potential for inflation and the potential for a slowdown at the same time. And I don't know why people aren't talking about that. I mean,
if you had to have a name for a slowdown and inflation at the same time,
what would it be?
Well, my main reason is I don't think they're as smart as us. That's my main reason why I don't think they're talking about it. But inflation is ramping, and inflation is an ocean liner. It's not a speedboat. It doesn't just turn around. So consumption never really slowed to a level, as Jim Bianco told us live a couple times, never really slowed to a level to sort of push inflation, markedly lower. Yeah, we're down from 7, 8, 9%. But the only way that Trump can achieve, by the way, did you guys see all those Democrat politicians putting the same video out?
Same exactly. That was creepy as shit.
Same script and everything. They're also all holding their little lavalier mics here. You at least think 1 or 2 of them would have like some sort of different mic setup.
That was crazy.
Somebody mailed a script and microphones to them or something.
Yeah, didn't it make kind of the hair stand up on the back of your neck? It was so weird and creepy.
It was
like they're all hypnotized or something.
Like they were all NPCs.
Yeah. What does NPC mean?
A non-player character.
Oh, right. I gotcha. Yeah.
Yeah. That was so weird. But I mean, what else could the Treasury market, this is a question for both of you. What else could the Treasury market be showing us when you look at 3-month, 6-month, 12-month annualized inflation, whether it's CPI, PCE, and then you see, things like what crude oil is telling us, which we can look at next if you want to. What else would it be but possibly stubborn inflation and a potential slowdown from some of the other things going on, like government austerity? What else would it be?
Well, so see, I still go back to the supply thing, because if people thought inflation was going to be 3%, I don't think they'd want to buy 10 years. Because that erodes into their returns. I think that there is more of a supply issue. I think the market actually believes that Donald Trump is serious, and the Doge thing might not be where they think that the cuts are really going to come from. When he started talking about defense as it relates to Europe, as it relates to Ukraine, and then said he wanted the Defense Department to cut 8% per year. I don't know if you guys heard that. I think the global bond market is saying, oh, well, that's interesting. Maybe we will buy some bonds because maybe there won't be as many to buy. That's what I think.
Well, here's my question to you. When you say that, that the supply is you think people are going to be buying it, therefore lowering rates down the road.
Yeah.
But when does that become a thing? You think it becomes the next few auctions?
Well, no, I already think it has become somewhat of a thing. And that's what we're seeing, the move from 4.8 down to 4.1. But again, yeah, we have to see some auctions of substantial amounts go well. Because the last couple of years, every long end auction, they've been putting out a smaller than normal amount, and then mostly taking advantage of all the demand that still remains in the short end. So I want to see those auctions go well. It's going to be a big deal.
All right, here's crude oil, Mikey. What do you see?
Again, we talked about, I think it was on last last show that I was watching for it to come back in the support zone, which we finally have done. But overall, I mean, it broke higher, and now it's just slowly come back to it's a major equilibrium point. So, is there any fantastic setups alongside? No. I'm going to be watching for bounce plays in this area, but again, short-term bounce plays. We've got very major resistance between 70 and 71 at this point, and even on a more substantial bounce, even if it managed to get to 73, does not put me in the bullish camp for anything more than scalp plays.
Yeah, I think this is also, by the way, a big, I mean, Trump said this through the whole, I hate to keep going back to politics on this, but I've been arguing with a lot of people about this lately. Trump said that the best way to get prices down, and I'm not sure whether I agree with him or not, but the best way to get prices down was drop energy costs. And, I don't necessarily, I even joked that he was going to take credit for this move. I don't think this move is all him, but where do we sit on Saudi Arabia unwinding the production cuts? Anyone have anything to say about that? They're unwinding them.
I don't. I would ask you if I had something to say about it.
Well, I guess, does the new administration have anything to do with that? Because they said, supply and demand is roughly balanced, and the price hasn't changed for how long, Mike, on this chart? I mean, why is it balanced now? The freaking cuts have been on for 2 years. Has it balanced at such a beautiful level compared to where, you look at the chart and this is just a massive range.
Yeah, if you look at here's the weekly chart.
Yeah.
There's
nothing for us, right?
We're essentially trading at levels we were trading in January of 24, or even the August of 23, or February to November of 22.
That's when the cuts took place.
Here we go. If you take this out to a macro level, here's your monthly. Look at this.
Yeah, shit. Wow.
So I don't know what they're talking about in terms of balance.
This is just a huge overall. Yeah, in a huge trading range for, boy, it broke out in February of 22 or March of 22, but then snapped back right by September. It was back in the range, and it's pretty much stayed in that range.
Sterling's saying hello to us, by the way.
Oh, thanks, Sterling. Appreciate you being here. Now, I have a question. Have you guys heard about this crazy thing the kids are doing called Bitcoin or whatever it is? You guys have heard about it?
Never heard of it.
Okay, first of all, before we put the Bitcoin chart up, I wanted to remind people that people have been doing this a long time. We have this saying, buy the rumor, sell the fact, buy the rumor, sell the truth, whatever you want to call it. And what that means is going into a situation, for instance, the announcement of a sovereign reserve of Bitcoin, probably there was a lot of people who were bulled up on that. And then on March 2nd, when the news broke, did we go higher? Sure, we went 10% higher. Probably did all those people were like, okay, good. This is my chance to sell it. Boom. And then we popped the shit out of it. And that's what happened. I think it is fundamentally nothing. I think it was a market position movement. And today's strength, to me, helps to solidify that position. Bobby or Mike?
Yeah, I don't understand those kinds of spikes, but I guess in a less mature market like Bitcoin, you could see that happening. I mean, we see that kind of stuff in individual stocks, and it kind of goes to, this is going to be taken as a bad thing by Bitcoin, what I call Bitcoin cultists, which I don't mean that as an insult. They just say, don't buy anything else. The guys like Saylor, who was, by the way, jokingly saying to sell a kidney. He didn't actually want people to sell a kidney. Peter Schiff,
don't go selling a kidney, people. Okay.
Yeah, Peter Schiff was like, this guy's telling you to sell a kidney. He's not really telling you to sell a kidney. Knuckleheads. Like there's no stylistic license anymore. But anyway, it again goes to show you that, people take these things way too seriously. And that's where buy the rumor, sell the fact came from.
Yeah. Perfect. Mike, let's look at the charts.
The short term on Bitcoin, it's confirmed. It confirmed last week a double top. Went down to the first target. Didn't actually trigger because Bitcoin, the announcement came over the weekend, and we had the strong snapback rally. And this chart closes on a Sunday night. So I'm still watching for rollover plays in Bitcoin unless it can close back above 97,700. Other than that, if it closes above that, then I'll be back in neutral to bullish mode. Until then, I still have to go with the probabilities that we could see continued rollover plays.
Interesting.
So real quick, Widge put a question in, and then Sterling put a question and Widge said, what is the drop dead price for production on crude oil for additional U.S. production if we get lower regulation and more access? So additional U.S. production is around 65, unfortunately. Widge asked if it was from between 50 and 60. To continue to produce, it's closer to 45. But talking about CapEx and additional production, I think you also have to have much lower rates, so they can get better terms on investment capital. So unfortunately, I don't think it's in our near future. And then Sterling, don't know if you guys saw this or not, since it was announced while you were streaming, breaking: U.S. Commerce Secretary Lutnick, Trump may roll back Canada and Mexico tariffs tomorrow. I've asked Sterling to put the source in here. I don't know if he saw me ask that, but apparently, hopefully he's listening, so we could put the source in here.
Yeah, I'm looking it up to see if I can find the source too.
Mike, in terms of longer term Bitcoin, do you see, well, actually, let me call it medium term because it's really the daily. The daily is telling me on Bitcoin to sell rallies now. Am I wrong? Or is that something you wouldn't do with the 200 right there?
No, I've been looking to sell rallies.
This is for trades, people. Don't get mad at us.
Yeah. It is until it regains a key price level, because we talked long ago, that this has to sustain up here. We agreed, and this was a few months ago, that we were watching for another potential move higher, and that could be a significant medium-term top. And it's proven to be a significant medium-term top, which has confirmed but not officially triggered a topping pattern. So I'm in the sell the rally camp until it can reprove itself. Again, I don't have to pick a low in Bitcoin. I just have to pick the next move. And right now, we don't have a strong bottoming pattern just yet. Technically, Bitcoin could trade back to 70K.
You know why I agree with you completely? Is because after the announcement of the United States forming a sovereign Bitcoin reserve, we didn't eclipse 100,000. You know what I mean? So that's a pretty good tailwind. When you're talking about broad adoption being the theme for over 2 years, and you're saying BlackRock, Van Eck, and now the United States government, that's a big deal. So you'd want to be alongside their trades, and it didn't go above 100,000, didn't close above 100,000. To me, that signals some stormy weather.
Yeah,
I think. Go ahead. I'm sorry.
That's where I'll be watching for a bottoming pattern. I mean, since this is live, we have this little potential. This actually qualifies as a potential double bottom. So, which is interesting enough, if you do close above the announcement days, the strategic reserve announcement days high, then it does trigger a mini double bottom that could follow through above that 97,700, 600 area. That could then lead to, that would be something that I would watch for repositioning long. But until we close above that level, then I can't put all my eggs in the long basket. And that would theoretically retest the key target. Is not the final target. It's because this cuts in the candle bodies is actually 105,500. So that's the only thing that would, again, shift me in the short term to get on the short-term bullish train.
Got it. Bob?
I want to look at Palantir because I'm ready to. So I exited that position actually just short of the recent highs. I exited that position on Thursday, the 13th. And then we turned around, and medium term, I have some sells, but look at Mike already doing it. But I saw this double. Okay. And I said, okay, the double takes me back into I don't want to buy the double personally, but it takes me back more into a bullish stance. So what do you have here?
Well, if it closes above Monday's highs, first, I mean, it has to trade above there first to confirm it. But as long as it gets above closing remains closed above $90.48. You are against the daily rotation zone, so it lowers the probabilities a bit. We are within the weekly rotation zone for a potential bounce play. Interesting enough is look where the final potential target takes it to. This was a major support zone from the breakaway earnings report that we finally closed right at back on Friday the 21st, and then followed through with the breakdown play, and the potential double takes it right back there. The only thing, this could be for a short-term bounce. Again, if we get more of a snapback rally because we are in oversold conditions, and if we get more of a snapback rally, I would not be surprised to see this, but this would be a bounce play only unless this double then follows through with a close back above 107.85. A close above 107.85 would shift the probabilities to retest the prior high zone. Other than that, I'd be watching for these little short-term plays to get bounces off and then rollover plays again.
I like the basically looking back at this later, Jimmy, if that were to play out, let's say the double trigger and it got up to its target, everybody like a year from now, 6 months from now, will be like, oh, that was the gap fill rally. It was obvious. Whereas right now, nobody sees it as obvious.
Exactly. No, I see the gap, right? I was actually thinking about the gap when you were talking. Yeah.
Yeah. And it's just one of those things. Gap fill. It was obvious.
Oh, of course. Sure. Of course. Yeah.
And that's sort of so happens the target for the doubles right at that gap fill. I mean, you have the breakdown zone, you have the gap fill, and you have the target for the double. So you might as well back up the truck and you 50 times leverage, put it all on.
But there's another one. Oh, damn. I think it was in.
That was a joke.
We go back to it.
Do not back up the truck.
We go back to a crude oil chart. There was a potential double there that just got blown apart to the downside.
And I would, after we do crude, I'd love to do XLF just because the curve is steepening.
Okay. Somewhere around Feb 7, Mike, is one of the points. Might be February 6th or so. And then there was the other double there and it got completely blown out. And I always have people all the time, and it's a sloppier one because there's the path to the target's a little more difficult. But people ask me all the time, well, if that's a double bottom, why don't you just go long now? And I'm like, because it doesn't work that way. You have to have.
All right, here's an example. You had this was a potential double right here.
Yeah.
But it didn't,
which never confirmed or triggered.
Right.
And then it turned into a triple, which slightly favors a continuation pattern. But again, why we don't then say, oh, it's now a triple, let's just short the crap out of this, is because it's only by a couple percentage points that it favors a continuation pattern. So again, it doesn't shift the probabilities enough. That's why we don't just back up and say, hey, well, look, the double never confirmed. Right. It's now a triple. Let's just short, because this could then turn just into a horizontal range trade.
Right.
You guys can still hear me, right?
Yeah. What you want to look at, Jimmy?
I want to look at the banks. We talked about the yield curve steepening again. Banks tend to love a steeper yield curve. So XLF perhaps.
Well, XLF in the short term, it traded back and forth right around you. So you had the prior breakout. Come on. I'm having trouble with my clicky finger. So it broke out and then it tried to sustain. It tried to build a base. What was interesting here, if you look at this key level I'm marking off, so it built this horizontal channel recently since the end of January. It tried to break above it on Monday, reversed down through it. So this was a potential intraday breakout play that failed with the close. And then look what it's done since. It's now broken. So this would be considered a shake and bake pattern. Shake people into the long side and then just trap them. And now it's completely taken out the other side of the range. So in the short term, not bullish. In the short term, not bullish. It's come down to the 50% harmonic. Now we still have a gap left behind, but I'm going to be watching to see how it reacts between this 49.80 and 49.15 level, 49.14. You close below the 49.14, I will then shift into the XLF continued pullback camp to potentially retest the mid-January lows and reconnect with the 200 simple, which again has not been reconnected with since it broke out in November of 23. So that's the whole target. But in the short term, without forming some kind of bottoming pattern above 49.14, I would not be piling in this yet.
Jimmy, it looks like there's on X, there's a bunch of videos of Lutnick talking on Fox with the headline that says deal may be announced tomorrow on tariffs. And it's on with Larry Kudlow. So you might want to call him or text him and see.
I'll text him after the show.
Yeah, after the show, and confirm if that's actually what it was, because I'm not going to listen to this whole Fox News clip.
Me neither, but let's see what the market thinks. So the stock market bounced back a little bit.
Seconds of it, you know? So yeah. Who knows what the whole context was.
Exactly. Bobby, you want to look at one more thing or no?
Can I just update one more thing on XLF?
Yeah, please.
Also, see, we've pulled, here's the weekly rotation zone. And I love the week for stocks and for ETFs. I love the weekly rotation zone. You see how we pulled back in it multiple times. And this was just a gap open below it, but closing above it. Back in January, we pretty much closed right at it. And then we had a strong reversal bar. If we close, I remember I said that 49.14 level. If we close below that on the daily, we may close below it on the weekly, which would be the first close since we started this major trend. That's another reason. We also have a significant divergence. You see a higher high in price action on a weekly basis between the tops in November and the tops in February, beginning of March, and we have a much lower RSI. So we have a waning momentum divergence in there with weekly cycles still headed down. So XLF could get interesting with more downside potential price action over the next few weeks.
Nice.
Last one I want to look at, Jimmy, unless you got something, is Walmart.
Nope, I'm good.
Wally World. So
he doesn't know I'm going to ask about these.
No.
How many things do you look at?
I look at a lot. I don't have a life. Okay.
Oh, that's awesome.
But this is where I was watching for a key bounce play in Walmart. We had a little %B buy back from between Monday to 24th. This is an example of a break. This is what I'll be watching over the next couple of days. With
Mike,
the highs.
Let me interrupt
you,
Mike, let me interrupt you. Explain to people what a %B buy is without giving the secret sauce out.
I can get, you know what?
Whatever you want. Whatever you want. I don't want to make you, I don't want to. Yeah. So,
yeah,
I said it.
What I watched for, this is here. You know what? If people are going to tune in, it's going to help. Come every month and watch us live. Here's what I'm watching. This is a lot of secret sauce, but that's good because the more people that can learn this stuff in reliable patterns. So I'm using a Bollinger Band %B, a length of 5, high, low, close divided by 3 is the input source, and standard deviation of 1. What I watch for I'll just tell you what I watch for buy bounce plays. So we set up, you see the %B drop below 0. That is a setup bar. Now I then watch that bar's high. The most reliable is when it's broken the next day. So this could be traded the next day on a break of that high. However, you need it to confirm with a follow through of a close. So this closed way up. This would have had to be traded intraday. If let's say this broke above it and closed below it, I would not be carrying the position because it would be a failed %B buy, which generally leads to consolidation or a retest of the lows. The stop initially is on a closing basis below the low of the bar of the setup bar. This then I was watching this where I drew this red pinkish square is between the 50 and the 62.5 harmonic for a top area. Why? Because on bounce plays after extended pullbacks, bounce plays generally top out between the 50 and the 62.5. You can see we spiked up there, pulled back, spiked in there, closed just below it. And then on Monday, spiked in there, and then downward closed. So this level has held. Now, does that mean it's all she wrote? That's all she wrote for this bounce play. But now what I'm watching is to see on this pullback is if we, let me change the color real quick. If we then set up and trade back below 93.96, because that would take it in potential double bottom territory. Now, overall, the fundamentals are not fantastic from a valuation perspective from Walmart. That's why these are bounce plays only, not back up the truck. But if it were to come down there, look where that takes us. We have gap fills left behind, okay, from earnings. So it's not set up yet, but this is where I will sort of use my own roadmap to potentially watch for things. And then the only thing that would get me bullish again would be if this pulls back a little farther, then reverses and closes back above 99.49. That would trigger the bounce play. And the second target on the double is virtually right at the gap close. I love how things just magically line up, you know.
Yep. Like I said, it's not voodoo.
Read Sterling's message, will you? Because Mike's about to give out where they can find him anyway, right? Can you
it's on YouTube?
No, it's on chat. If you look at the bottom of your Riverside panel, you'll see a chat bubble there.
I do not. Oh, yeah, no? I do.
Yeah, you do. Look at Sterling's comment there.
Studio chat. Hold on. Chats.
Actually, I could just read it rather than
read it about. I can't see it.
Since you always take us out, Sterling says, everyone watching this should join us. And he means him and Mike. Sterling is a moderator for Mike's live broadcast that he does every morning. Should join us every morning at 9 a.m. Eastern time, Monday through Friday on the Path Trading Partners live stream on YouTube and X.
I think that's a great idea. I think the more you guys can learn about this, the more you can protect yourself, the more you can potentially capitalize on this shit, because it does work. It's not just voodoo. It's not just squiggly lines. It really does measure sentiment and momentum, and Mike Arnold is one of the best at it.
And
Mike, tell them where they can find
I just want to point something out real quick, then we can call it a wrap. But look, what called the little short-term, this is, again, a short-term bottom today, but look at this double that formed. And I think Sterling, I think he texted me saying he traded this one, but you had this little mini double patterns.
Yeah.
You know, it's not a guarantee. Again, they can fail. But if you learn something that's reliable and then you learn to spot them, you can trade them on multiple time frames, and longer time frames are more important than shorter time frames. But this is something that if you could put in your repertoire, especially for stocks, you spot long-term double bottoms after sell-offs on a weekly basis. It's something that you can really learn to manage a portfolio with just a single pattern.
And just for potential Sam on X, who asked me what bounce, when Jimmy says we'll talk about this bounce, there's Jimmy's bounce.
Yeah. Sam texted this. If I said the sun rose in the east and set in the west, he'd say there's really no proof of that. Were you there?
Evidence.
I want evidence. And when I love on Twitter when someone says, evidence, please. And I'll be like, no. You got Google too. Just go find it yourself. I don't need enough to.
Hey, on X, Hyun Chin Kim just said cooked beef liver is tough. Easiest to eat raw. Chicken liver is the easiest to eat, as I put it in everything post-cook with salt, pepper, turmeric, and I also snack on it cold.
Tell them no thanks. I'm not eating it raw. All right. Thank you guys for joining us on our first live show. Hopefully you find it as valuable as I did. I love hearing Mike talk about these things. But again, I've said it 100 times, and I mean it from the bottom of my heart. You guys make this successful. All the retweets, the DMs, the support you guys give us, it is fantastic. It is humbling. Bobby and I were in legacy media for 20, 25 years. We could not survive there because we happen to like to tell things exactly the way we feel. And maybe our opinions are stupid, but they're exactly our opinions, not filtered by sponsors or producers. So thank you guys for joining us. Special thanks to our sponsors, Hardcore Italians. Go to that website, use our promo code FU for Finance Unfiltered, and go to Independence Arc for beef. It is not that expensive. It is so much more healthy and delicious than what you can get at the grocery store. Grass-fed, grass-finished, Independence Arc. I will be putting on beef livers and onions on the grill because my wife won't let me cook them in the house because she says liver smells bad. She's wrong, but I'm going to be cooking it on the grill out in the rain in about 20 minutes, and I will live tweet how it's going. Thank you guys for joining us.